Board, Chakri Lokapriya, CIO and MD at TCG AMC. Chakri, what a day it was for the equity markets. Yes, some would argue that it was a tad inevitable given the mood that we've seen across the globe as well as LTCG. But a market correction like this, investors are hitting the panic button. What's the word of caution? What are your pearls of wisdom? What would you like to tell them?
Well, I don't know if they're pearls of wisdom, but what's coming off LTCG is a very unique timing by the government, a wrong one at that, to introduce just when capital was needed in this country. And of course, I think the US yesterday's was more a short-term reaction. Things should things should come back to normalcy very quickly. But in the case of India, I think we've run up quite fast last year. So the returns will kind of moderate, but still be fairly in double digits, strong ones this year too.
Okay, that's the view coming in. So at a time like this, what is it that you're seeing in terms of the overall outlook for the market? Are you seeing that this is just a temporary blip, or we're likely to see some sort of a prolonged market fall?
I think what is important at this point in time is an earnings recovery that is expected to happen sometime towards the second half of this year. Now, as that unfolds, I think the markets will stabilize, whereas in the very short term, we will see sharp volatility continue for the next few days, maybe slightly longer. But over the next several months, I think we will see a return to calm as earnings grow, and the stock market should deliver positive returns.
Okay, let's get to some of those viewer queries as well, Chakri. And we've got a question coming in from Anil Raval. He says, with this market correction, is it a good time to relook mid and small cap funds? What exactly is your advice? You know, one would think that at a time when the markets are looking a little bit volatile, would it be prudent as a strategy to maybe stay clear from the mid and the small cap funds? Your outlook?
At this point in time, I would look at the large cap funds as well as the multi-cap funds, rather than pure mid cap or small cap. And this is because primarily for the liquidity reasons. Large cap fund managers have greater flexibility, and so do multi-cap fund managers, who can rejig their portfolios depending on market conditions with greater alacrity. And so therefore, I think the tilt is towards multi-cap funds at this point in time.
Okay, that's the outlook coming in from Chakri. You can look at large cap, multi-cap funds. Maybe as the market stabilizes a little more, when we have a little more clarity as to what the direction is, you can look at mid and small cap funds. I hope that you were able to get that query answered. Well, let's get in some more perspective then from Joel D'Souza. He says, how should I go about topping up my equity allocation now? Should I put in a lump sum or invest gradually? And from what I understand from market speak right now, that given the kind of volatile times that we're seeing, it would be advisable to steer clear from investing via lump sum?
I think, given market corrections do present an opportunity to invest a slightly larger sum of money rather than a SIP kind of a model. But even after this correction, some of the stock valuations, because remember until January the Nifty was up 5%. So even after the fall in the month of February, it's still kind of marginally in the red. So from that perspective, a SIP is a more favorable model, and you can spread it out over the next several months with a slightly higher allocation initially to take advantage of this fall.
Okay, that's the outlook coming in right now as to what exactly should be the view when it comes to equity allocation. Joel, talking about how SIPs continue to remain a favorable avenue of investing, and in view of the kind of volatility we might see in the year, you can stick to looking at the SIP route for investment. But just wanted to get in a view from you as well, Chakri, as to what the LTCG implications are from an investor standpoint in terms of what really the outlook is now for investors to look at. What does this mean?
LTCG, long-term capital gains, is now 10% for the equities, which was 0 for so many years now. And mind you, the difference between equities and fixed income is equity is risk capital, therefore it can go up and down, whereas fixed income, you make a fixed return, let's say a 7% product will make you 7% per year. On the other hand, equities can make you 15% one year and much lesser or more the following year. So now you have a 10% introduction of cap tax in the forms of LTCG. So this means that you should factor that in, and given a long-term average of about 15%, so you should now take away minus about 1.5% from that. So 13%, 13 to 14% is now the long-term average after tax.
Okay. Chakri, when we were chatting a little bit earlier in terms of what the overall market outlook is, you said that one should look to take advantage of the market fall. So in light of this, give us a sense as to which are the sectors in which you're finding comfort from an equity point of view.
In the latest budget, the government's budget, their focus was on irrigation, infrastructure, and of course recapitalizing banks, because banks are the engine of growth. So that would be our priority areas for us to look at, which is irrigation, number of companies in the polymer space with supply, like Supreme, Astral, Jain Irrigation, companies like that. Then of course in financials, both the PSUs and privates, and infrastructure companies.
Okay, those are some of the sectors that Chakri is looking at.